Hi, this is Kerry Artak with Wicked Stocks bringing you the daily SPY report for Thursday, November 18th. Before I jump into the charts, a few things. First and foremost, please like and please subscribe to the Wicked Stocks YouTube channel. Subscribing to the channel will provide you notifications by YouTube each and every time the Daily SPY report has been uploaded for your viewing, generally by 6 p.m., often earlier, Central Standard Time, Chicago, each and every trading day for the next trading day. And also for you premium members for Wicked Stocks, you'll know that we put out a video today on Blink charging, symbol BLNK. It is presently testing significant overhead resistance and poised for breakout a little higher on Friday. And we've got a nice buy signal into the first quarter. You should take a look at that. If you're not a Wicked Stocks premium member, I invite you to be so. The cost is $25 a month. You can do a 7-day free trial. If you're not happy with it during the 7 days, you can certainly unsubscribe. You can unsubscribe at any time. There are no long-term commitments with Wicked Stocks. Let's jump into the charts. I'm going to show you charts you're probably familiar with now for the last few weeks, but I think repetition is key to remind you that we, about a week and a half, 2 weeks ago, retested long-term resistance as defined by that long-term trend line on the daily chart. You can also find it on the weekly chart. We tested it in September. We tested it a couple of weeks ago. It's above the market presently at 475.54. And, you know, once you test long-term resistance, especially as defined by a trend line / channel top at 475.54, the channel bottom presently in the 420s is sort of calling, if you will. The market is drawn to it like a magnet at times. Now, that is all irrelevant and a moot point if we happen to settle above 475.54, which would elicit a long-term buy signal. But until that's a fact, this market is susceptible to falling back. I don't know about 423.74, but I do think the intermediate channel structure presently at 438.45 is not out of the question by the end of the year. Our first sign that that may well indeed play out would be a settlement today below this steeply rising channel bottom, which is more properly illustrated here by zooming in at 466.98 to 467.41 today. That is a combination, rising 1/3 speed line and channel bottom projected off that October low area. We can bottom out there into next week, and from here, continue higher to retest that 475.54 long-term trend line between now and, say, the end of next week. Now, for today, we still have 470.65. That is the move high a couple of weeks ago. We came to within a hair of testing it actually on Tuesday and backed off since. It's at 470.65. It is an intraday containment level, not significant. It can contain initial buying pressures, and if we happen to push through 470.65 today, especially early in the day, we could certainly, by the closing bell, reach 475.54, which would be a significant rally for the day. Once again, 475.54 able to contain buying through the balance of the year, and below which this market remains susceptible to developing heavy trade as we move into later year. Let's take a look at the support and resistance levels for today. I just mentioned the 466.98 to 67.41 area, that combination speed line channel bottom, able to contain weekly selling pressures, and above which we can, by the end of next week, retest the 475.54 long-term trend line. And also you see the 470.65 intraday containment level inside that. That is the move high from a couple of weeks ago. In hindsight, that could have been a session containment level, but I like to keep it light there given the overall near-term bullish dynamic above 466.98. That's right, near-term we're still constructive, but mid to longer term this market can develop heavy trade below 475.54. There's sort of a convergence really of two different time frames that is playing out right now. And so when does the near term tip south into the bearish camp? It would be a settlement today below 466.98. Now, just know that if we break 466.98 today, we could fall all the way to 461.89 on an intraday basis, which you can see here as just a short-term channel bottom, horizontal channel structure. Now, I need to say a couple things about this. I show a meaningful sell signal through the rest of November below 466.98. If you're not convinced of that, I would then urge you to consider playing the short side or becoming bearish in your mindset if we close below 461.89. And so that would be a secondary sell signal. I do think if we close below 466.98 today, and we do not close below 461.89 today, that closing below 461.89 is considered an eventuality as we continue over the next few days, probably on Friday's close. And that should then tip the market south in a more aggressive way. I think closing below 466.98, as I've been saying, should yield that 453.19 to 54.05 area over the next, at this point in time, it's actually looking more like two to 3 weeks, perhaps, depending on volatility. Now, if volatility spikes as we continue south, we could get down to 453.19 to 54.05 by the end of next week, certainly. And then overall, I think closing below 466.98, and then considering the fact that we have essentially tested long-term resistance in the mid 470s now, 475 and change, over the last couple of weeks. If you put those two together, I think you need to allow for that 438.45 rising channel bottom over the next 3 to 5 weeks if we close today below 466.98. Now, there's certainly stair steps on the way down. I just mentioned 461.89, and of course we have 453.19 and then 438.45. It kind of progresses in that way, but closing below 466.98, I show bearish trade into December, and I would not be surprised if by the end of the year we actually then test that 438.45 channel bottom, which will be in the 440s as we move into December activity. I'm going to cover the dollar and gold to finish up the video today. The final segment will be the support and resistance levels that you can print off your smartphone and such. But let's take a look at the U.S. dollar index. I showed this chart last week before we tested that channel top. It's rising 17 cents a week. Last week it was 96.02, as you recall. This week 96.19. We pushed through it just a bit, got to 96.24, and then backed off since. So that formation, if we settle above it, 96.19, say at the end of this week, then within about 2 to 3 weeks, we should reach the target at 97.998. There's also a 5/8 Fibonacci retracement level on the way up around 97.72 or so. I showed that in the video, I think about a week ago. I just wanted to apprise you of the update on this and to remind you that we are bullish through the rest of the year above 93.80 to 93.97 roughly. That is a solid zone of support that if tested in the next few weeks, and it may be, as long as we're holding below 96.19, we can fall back to that support area over the next few weeks. It can absorb selling into the first quarter, and above which a 2 to 3 month objective at 97.998, that accelerates to within probably 2 to 3 weeks if we close Friday above 96.19. So there's that. I also wanted to talk a little bit about gold. I'm going to show you COMEX gold here. This is a futures chart. I'd rather show you COMEX gold than the GLD, the ETF, because there's just so much more on a trade-weighted basis. There's so much more participation in the COMEX gold market than the GLD. I think it's a 20-fold in terms of gold bullion and what it represents and the number of transactions every day, that it's just a bigger market. And I think it's a more accurate depiction of where gold may go here. Now, there's a lot of talk about inflation, possibly hyperinflation, the returning of inflation. And, gold is a barometer of inflation, obviously. And I see 1924.2. It happens to be a 2 to 3 week target right now, near term for me, which I'm not really going to show because I don't want to get too deep in the weeds on gold. I'm just mentioning that 1924.2 is my ceiling through the rest of the year and into Q1. And from there, we can fall back into the 1680s or even lower as we move into Q1, Q2 of next year. And 1924.2 is also a significant upside pivot point. So for me, closing above 1924.2 at the end of any week, and that number is changing ever so gradually, would be sort of the red flag for me that, this commotion about a continued growing inflationary pressures, which are true right now, but there's an argument that seems to be afoot in the financial community as to whether this is short-term or long-term. whether this is just supply chain COVID phenomenon that will alleviate by this time next year, or whether inflation is here to stay. And for me, closing above 1924.2 would be the red flag. I would pretty quickly, within a month or two, expect then another test of that August 2020 high at 2089.2, but I don't put a lot of emphasis on that old high. I think that if we close above 1924.2, this market can run again in a protracted sense. We could see a rally. I'm going to let that go. We could see a rally not unlike what occurred from August of 18 to August of 2020, where the gold market appreciated considerably. We could see another one of those, and I've got targets here then above 1924.2. Now these are longer term possibilities. There's no certainties, of course, but I think if we close above 1924.2, we could, within a year and a half or two, reach up to that 2585 area. April of 2023, those two channel formations converge perfectly. Now, I don't know if the timing would be that perfect, but you can see that what is now at 2330 and rising will be 2585 in April of 23, and I have to let that go. And that, what is that, 2500 will be at 2585 as well. So this is just a picture of what I see for the overall gold market. If we get above 1924.2, this thing can run and will then, I think, reflect kind of a consistent inflationary market that will plague the overall economy for months to come, maybe for the next couple of years. But until then, it's all talk as far as I'm concerned. And holding below 1924.2, this thing can fall right back again into the 1680s or lower in the months ahead. I'll leave you with the support and resistance levels today. Just a reminder, we've got decent support in the upper 460s, 66.98 to 67.41. Can contain selling into next week, and above which we can retest 475.54 long-term resistance by the end of next week. But we remain heavy mid to long-term below 475.54, and closing below 466.98 would not surprise me in the least. If we broke it today, 461.89 attainable intraday, and closing below 466.98, I think the 454.05 September high is likely within a couple of weeks, and we could continue all the way back into the 440s by the end of December. And that is all I've got for Thursday's Daily SPY Report. I will see you tomorrow for Friday's report. You have a great evening.